Hello, everybody, and I wanted to make a video on Opendoor today. So we've had some breaking news on Opendoor just now, and I think this is one of the case where bad news is actually good news. So what's happening at Opendoor? Well, the CEO Eric Wu, which is a CEO that I love, I think he does a great job. Well, he's quote unquote stepping down, but it's important to note that he's stepping down from the CEO role and not from the company. This is a big deal. This is a big difference. The CEO is not going to be CEO anymore. He will become a president, the president of marketplace, which is, in my opinion, one of the key, if not the most key product of Opendoor. And so when I look at this, I'm thinking it's okay. It's okay because the business is still founder led, and the insiders, and being president of marketplace is definitely being an insider, still has tremendous skin in the game and is still leading the most fundamental part of the business, in my opinion, which is the future of the business, which is marketplace. So to me, this is still a founder led business, even though the founder is not in the CEO role, but is in the president role, but in the role of the president of a very important part, which is marketplace. And they have shared leadership now, so you can think of them as a shared leadership. And why am I so happy about Eric Wu focusing on marketplace, on the third party marketplace, and focusing on innovation is because as an investor in Opendoor, I mostly care about innovation. I care about the start of the S curve that will disrupt real estate. And I believe Opendoor will be the trigger to that S curve. So that's what I care about, right? I'm in Opendoor for a 20, a 50x, maybe 100x. I'm not in Opendoor for, 15% a year. So that's okay. That's okay. I care about innovation. That's what I care the most about. So to me, I get the full focus of Eric Wu on innovation, right? The founder now will have entire time to focus on innovation, entire time to focus on building the marketplace, entire time on thinking about where the platform is headed, where the platform can go, and how eventually it can compete with MLS. Opendoor has always been a very, very binary investment for me. And I'm not in it for a 15% return. I am in it for a company that could potentially become like Amazon, which is why we need the founder in a highly, highly, highly innovative position. And in normal times, when the market actually cares about the future, in normal times, the CEO can fill that role. But right now, there's just no way the CEO can fill this role. The CEO right now, Eric Wu, he must have been living through a nightmare with the current macro. Like, how can you focus on innovation? How can you focus on disrupting real estate? How can you focus on creating value for buyers and sellers and creating a platform that people love when all people ask you on the conference call is, are you going to go bankrupt? When the media is all about, are you going to go bankrupt? When social media is criticizing you, when everybody says you're going to go bankrupt without doing any analysis, not a single ounce of analysis, you know, because they see the Fed raising rates, and so they think real estate is going to crash. And of course, it's not. The Fed can't raise rates. There's going to be a huge deficit in 2023, and they're going to have to get back to QE. It's a given for me that we will get back to QE. So real estate will not drop like 2008. Yet that's probably most of what the CEO has had to do for the past 9 months, 6 to 9 months, and criticism, constant criticism. So again, during the bear market, most of the duties were not innovation. Most of the duties must have been managing Wall Street's short-term insanity. Absolutely short-term insanity. That's all what it must have been doing. Wall Street is all short-sighted. It's all about the next quarter. Wall Street would probably be fine with Opendoor firing every single employee, shutting everything down, selling all of the assets, and closing the business forever. Then they would have the best quarter, the best financials ever, but they will also have no company. The company would be dead if they did that. Like if CEOs cater to the short-term desires of Wall Street, I can think of a lot of firms whose the best idea would be to just shut down the firm, sell everything, fire everybody, and have the best quarter ever, and then you don't have a firm left. That's not what Eric Wu is. Eric Wu is the founder. Eric Wu is the founder. Like he has a vision for the company. And Wall Street right now is all about the next quarter, next quarter, next quarter. Are you going to go bankrupt? That's all Wall Street cares about right now. And Wall Street may request more layoffs. I think that's a real possibility that they'll just request more layoffs, maybe exit of markets, etc. Things that are not conducive to innovation, things that are not conducive to culture. Wall Street will request that. And Wu, given that he's already done that, I'm guessing he doesn't want to do it again. He doesn't want to have to do it again. That's the last thing a founder wants to do. It's the last thing. When you found a firm, you don't want to lay off. It's the last thing a founder wants to do. I really mean it. I remember the CEO of the letter of a Shopify CEO, really heartbreaking. That's not what CEOs want to do. So I think, who is the best to handle Wall Street? Well, the CFO is the best to handle Wall Street, because the CFO speaks Wall Street language. It's all about the short term right now. Right now, it's all about the short term. It's all Wall Street cares about. They see the stock down 90% and they only care about the short term. Are they going bankrupt or not? So Wall Street just wants financial safety. And they want more financial safety than is probably needed. I really mean that. I don't think Opendoor right now is going bankrupt. And if I believed they were going bankrupt, I would sell the stock and I would make a video about it. I don't think they're going bankrupt. But Wall Street, because they don't have the depth of analysis that retail investors have, because they don't invest tens of hours studying a stock like a retail investor, Wall Street thinks they're going bankrupt. And so Wall Street's most likely going to ask to do very unsavory stuff, like more layoffs as discussed, but not just that. They may retract offers, so they may kill customer satisfaction by retracting offers that have been made. They may exit some markets that they just entered. And so you may have people that have dedicated 1 year, 2 years of their careers developing a market and they just shut it down because of short-term focus. And this is going to hurt Opendoor in the short term, no doubt. But my bet on Opendoor is that S-curve. I feel, it's not I feel, my analysis tells me that Opendoor will trigger an S-curve that revolutionizes real estate and will capture most of that S-curve. And of course, the triggering of that S-curve, as long as this madness of the short term happens, this short-term madness happens, as long as that happens, we're not triggering that S-curve. So when does that S-curve begin? Does it begin in 2024, 5, 6, 26? That's a delay, and that's very unfortunate. Very unfortunate for buyers and sellers of homes, because this market is broken. The real estate market is broken. It needs to be revolutionized, and Opendoor is the last company standing was a shot of doing that. But anyways, the new CEO, Carrie Wheeler, she's a former board member, right? She became the CFO, and she's described as a badass, as a very sharp woman with great business instincts. Well, that really sounds like something that Wall Street is looking for, doesn't it? Right? Badass, that's what Wall Street is looking for. So, I think this is a good move. I believe Eric Wu did the right decision. She does not have the socio-emotional wealth that comes with being a founder. When you are a founder, when you make those early moves, when your story, when the business's story becomes associated with you as the CEO, you have social emotional investment. You have social emotional wealth. You don't want to break that, especially when you're already a centimillionaire like Eric Wu is. So you don't want to break that. You don't want to break your reputation. So that makes sense for CEO to become the president of marketplace, for Eric Wu, the CEO, to become president of marketplace, and it makes sense for a very sharp, badass, great business instincts CEO to take the reins of Opendoor. It really makes sense in that sense. And so when you see the news tomorrow telling CEO steps down, that's not exactly a step down. You're stepping down, yes, but when someone tells you, oh, they step down, that assumes something terrible happened and they are leaving the company. No. Eric Wu's not leaving the company. We get Eric Wu back to innovate. That's I think a specific case where this makes a lot of sense. And I want to finish on 2 slides on hope. So first of all, I would argue the Thomas Edison or the Ben Graham of our time has stated that as well. Elon Musk, like him or not, but he said before that he wishes he could just develop great products. And he said it multiple times in so many interviews. The job of a CEO is not fun. And especially in a highly mistaken market like ours, especially that. So just like you had to persist for Tesla, it was very tough. Lots of short sellers, lots of people attacking you. That's what disruption looks like. When you have true disruption, people attack you. And so Musk has mentioned many times, I don't want to be the CEO anymore. I just want to do products. And I believe eventually that will happen. Again, terrible stuff. Imagine the short sellers writing letters to the media, writing your letters. Imagine the activist investors writing your letters. Imagine the board calling you and saying, hey, what's going on? Let us give you advice. Imagine the social media, right? Eric Wu is under 40. He's very social media connected. Imagine that. Imagine this is I was buying the stock when that happened. Imagine the entire CNBC set bashing you nonstop for 15 minutes on a Friday afternoon before your weekend. I mean, do you think Eric Wu didn't see that? Like, I remember that Friday like it was, like it happened today. Like I remember so clearly. Like for 15 minutes, you had a whole set on CNBC rejoicing at the death of Opendoor. Like, that's so insane. That's not journalism. That's insane. Okay? Imagine people tweeting pictures of your home and bashing you, especially when you know the story of a CEO. Like, if you're going to sacrifice your life for almost a decade, I don't have a single problem with you having a nice home, especially when he still owns so much of the stock, when his wealth is still so tied to Opendoor. All of this to say that this is not what an innovator needs. An innovator doesn't need this aid. Carrie will do the tough stuff. I believe a new CEO will do the tough things and the tough stuff. She does not have the attachment and the social-emotional wealth that comes attached with being a founder. So I think she'll do the tough stuff. And a final note of hope, I want to show you, this is not the first time that this happened in tech. Opendoor is fundamentally a technology-driven platform. The story of Opendoor reminds me of Snowflake. So the founder of Snowflake actually stepped down as CEO and became the president of products. So very similar to president of marketplace for Opendoor. And Snow, today, a few years later, is the most successful company in the data cloud space, no doubt, with the founder focusing on products, focusing on internal entrepreneurship, focusing on innovation, focusing on intrapreneurship or public entrepreneurship, focusing on that within the firm, strategic entrepreneurship. And the CEO being a Wall Street person, a rugged person who knows how to talk to Wall Street, right? So it worked really well for Snowflake. Snowflake is doing outstanding right now, doing better than ever. And this is funny, all right? It's not that you can tell based on stock price, because right now all stocks are down like insanity, regardless of whether they do well or not, regardless of whether the present value of their expected cash flow is high or not. Opendoor, if Opendoor succeeds, the present value, the expected value of that success, as low as these odds may be, is much bigger than $1 billion market cap. Much, much, much bigger. The market is just so short term right now, doesn't care. Snow succeeded because they hired a tough CEO, just like Carrie Wheeler, I believe, will be. And it's just one example among many others of CEO just refocusing on products. And I think this is overall, it's a special case, a special situation, but it's a special case where this is actually good news. This is a case where bad news is actually good news, in my humble opinion. This is just entertainment, not investment advice at all, ever. This is a very risky stock, binary outcome, but I believe it will win. Don't forget to like and subscribe the video. If you can, I really appreciate it. And please follow me on Twitter at @BeatTheDenominator. Thank you so much for watching and stay safe investing. Have a great day.